Equilibrium boxes are shown by marking out 50% of the higher time frame candles. We've spoken a lot about equilibrium, and in this section I'm going to focus on how to use it with these equilibrium boxes. So you can see in this example over here, we have a higher time frame projecting the equilibrium, and it projects the equilibrium box. So we want to look for a re-entry or an entry in that box so that it can stay in alignment with the direction of the market. As you can see, we had this massive wick rejection into the upper half of this equilibrium, but we do not get price close above it, which means we can look for an entry. It also just so happens that in this instance, we get a sweep, failure to displace, the CISD. This is such a fantastic setup that is actually playing out in this trade here. And looking on a bullish side, you can see price comes down, taps into this low, forms this sweep or failure to display CISD, but then notice how it stays within the upper half of this equilibrium box, which is the precise place we look for an entry or a re-entry. We can use equilibrium boxes to tie into this strategy and into how we can enter into very successful trades. So this is how we use it. This example, we've got a candle to closure. You can see we've got a wick equilibrium over here because we've got a long wick. You can see failure to displace, close of candle 2, confirms this candle to closure, and then we mark out the equilibrium box, or the software does it for you. And then we want to see price respect this upper half, or on the lower time frames we want to look for an entry in this upper half of this equilibrium level. And then you can see candle 3 explodes out, it engulfs candle 2, mark out the high and the low, the equilibrium of candle 3, and then we look to trade candle 4 within this upper half of candle 3. We look for an entry on the lower time frame. In our bearish example here, you can see we've got a candle 2 swing high, confirm candle 2 closure, failure to displace. Because it's got a large wick, we mark out the equilibrium of the wick, and the lower half of the wick is where we look to enter candle number 3. If we want to trade candle number 4, high, low of candle 3, equilibrium, and then we look for an entry on the lower time frame within the lower half of candle 3 equilibrium. The equilibrium boxes is where we look for the higher time frame wick to form. The goal is to locate fair value gaps, high or low, or if neither are present, an opposing candle for price to react off of and form the higher time frame wick. So this is where we want to look for entries and confluences within these equilibrium boxes. So as an example, we've got this higher time frame candle, and you can see over here candle 2 is a confirmed candle to closure, failure to displace. Candle 2 also engulfs candle number 1, which is a strong confluence, and then you can see it projects onto the lower time frame, a box in the precise place you want to look to enter into the trade. And when we enter in this box, you want to look for other confluences that line up, like lower time frame sweeps, fair value gaps, or price hitting a high or a low in these regions. And that just gives us a higher level of confluence to enter in this sequence. Here's another example. The goal is to look for a point of interest in the EQ box to anticipate where the higher time frame candle will form its wick. So you can see over here we've got candle 1, 2, 3, and 4 basically matching these candles on the right. You can see we got a candle to closure, failure to displace, candle 2 engulfs candle 1, so we can mark that out. That is a very good trade setup. This is what we look for. This is our key entry setup that we're looking for. And then you can see we've got equilibrium boxes being formed. They get projected onto the lower time frame chart, and you can see we want price to respect these levels, and this is precisely where we can look to catch an entry into this continuation. See, price comes up, catch entry, we get opposing candle, drop, opposing candle, drop. So it's just giving us a framework and giving us a place to look for a re-entry or an entry into our trades once it lines up with other confluences such as fair value gaps, highs or lows, or sweeps or opposing candles in these regions. That just lets us know that's exactly the setup we're looking to enter. Here is an example on the charts. You can see we've got the higher time frame candles here, which is the weekly candles, and then we've got the 4-hour lower time frame candles. And remember, we always want to synchronize this higher time frame with the lower time frame. You can see now we've got these equilibrium levels and boxes that have been projected onto the lower time frame. So let's look. You can see over here we get the sweep. You can see we get a sweep, failure to displace. Candle 2 engulfs candle 1. We mark out that level. This is our setup, guys. This is what we look to take a perfect entry. And then it projects out these boxes. So you can see this box over here is precisely this box over there. And that is what we are looking for. We are looking for an entry within this box. You can see over here, look at this equilibrium box. This was the area it was supposed to respect. It didn't respect it. We got a sweep. We got a CISD. Price broke above this CISD right over there. You can see. Once it broke above that CISD, we are looking for long positions. So it broke up, it retraced into this equilibrium box. So what do we notice? We notice a low gets taken out. You see a low gets taken out. We notice there's a CISD, a bullish CISD over here. And this is exactly what we're looking for. We're looking for these criteria or setups to happen within the equilibrium boxes. You can see over here, we've also got a fair value gap, just a tiny one, but it taps in there perfectly. So once we can find these other confluences that line up with these EQ boxes, that is exactly what we're looking for to stack confluences and give us more confirmation. But you can see price already broke over this CISD on the 4-hour. So we were confirmed there was a change in state of delivery. It retraced back into this EQ box, and then we look for confluences within that box. You can see we got fair value gap, we got a sweep, and then we just wait for price to break the opposing candle run or the CISD, and that is a great place to look for an entry. Otherwise, price pops into the next EQ box over here, and you can see what we've got. We've got a low being swept out. We've got opposing candles at the top here, which gets taken out, and that would be the precise place we would look for the entry. We've got fair value gaps, but not really tapping in. Yeah, we've got a fair value gap as well. So you can see price is tapping into fair value gap. It's causing a sweep. It's producing a CISD or an opposing candles, which we're going to look for, and that becomes the places we look for entries. So we would have entered when price broke and closed above that CISD, or when price closed above that CISD. But as you can see, we're just using these EQ boxes as a representation to look for other confluences when price comes to this level. If price had broken below this EQ box, that would have invalidated the trade, or broken below this one, it would have invalidated the trade, as did it do over here. So you can see price came up to this EQ and it actually broke through this EQ, which invalidates that trade and shows the turnaround in change of state of delivery. Also at the same time, this EQ was in the same place as this CISD. So when price broke that CISD, it was also breaking above the EQ level, which is invalidating this as a short trade. And then from this point onwards, we're only looking for longs and looking for longs.